Well, welcome back, everyone. What a way to start off the back half of the week with new all-time highs printing fresh ahead of the bell. We got the SPY up to the $550 and a 75 penny mark. And you might be wondering what's on the screen over here. Well, it is a daily candlestick chart of the market, the S&P 500. And on the left-hand side, you've got a watch list, which I'm sorting right now on a day-over-day basis. You can see that gold miners junior, levered, volatility, silver miners junior, silver miners overall, gold miners, and then Amazon are all at the top of the list. From a market cap weighted standpoint, well, on the up and up in terms of what's important, Amazon is the most significant of all of the areas up here. Now, NVIDIA did happen to hold the title up in this area for a good chunk of the pre-market and, of course, a bit of the morning. However, it was let go of. Profit was taken. It got sold down, and the market did come into some pressure. Now, before we go too far, I want to point out that the dollar did rise about 0.4% and got to an area that may indeed be trouble. Volatility did rise as well, and with the dollar rising, precious metal miners continued to carry on higher, and so did precious metals. Volatility, precious metals, and Amazon do not seem like a good mix overall. With Amazon and Google trying to hold the market up after NVIDIA came back down, where are we going next? If you take a look at the SPY and you look at it on the channel that I'm going to expose here, this channel goes back to October of 2022. It's the true bottom of the market where the dollar topped out. And we've been oscillating in this channel outside of a blip after the AI frenzy. Back into the channel we go. And it's a standard deviation channel where the top quadrant is, well, top end is 2 standard deviations away from normal, being the center. Now, you can see these lines pointing down here. At the beginning of each week in the active trader room, I come to the table with an idea of where risk may be going. And there's a lot of colorful lines on the page here. Well, that's the center of that linear regression channel. And then we've got some pivot levels over here. I'm going to just zoom in at the hard right edge over here, and you got to get a quick look at today's daily candle, excluding the pre-market. In the pre-market, we did get up as high as 550 at about 75 pennies. We came down and tested a very important support structure, roughly halfway through that big breakout bar. And we'd count this as day 2 in a pattern that we've been seeing. And that pattern does not have to repeat, but that's what patterns tend to do. Well, take a look at that breakout candle. 1, 2, 3, 4, 5, and then the 6th day down. We can find about 5-6 days after a big breakout candle going back in time that we then start to come down. There's another one right over here that we can take a quick look at. Breakout candle after consolidation. 1, 2, 3, 4, 5, 6, 7 days and then down. So this is a market effectively that is in wait for a pullback. Or is it just waiting for this rotation to continue as we move into the end of the month next week and then blast off to higher highs? Now, statistics would tell me it's more likely to pull back. The pullback today seems like the thin edge of the wedge. But let's get our tools working for us over here and identify likely outcomes. Now, I got to do some live trading in front of the active trader room members earlier today, and some of what you're going to see on the screen right now was done in front of folks, and that would be about half of the overall gain. I did gross with one contract trading by and large, just over $500, as you can see there. And you've got a lot going on the screen right now. You've got multiple time frames, about 4 or 5 technical toolkits applied to price. We're going to just start off with one time frame and take a look at that 4-hour chart, which really does tell a great story about what's happening. Well, when you look at the Champion Trend Pack toolkit, it comes with a sequence of signals. There's 3 stages to the sequence. Stage 1 involves the Champion Trend and Champion Cross. Now, that happened way back over here, as you can see, and that was earlier in the month. When we look going right, we can see that the Champion Cross and Champion Trend engaged back over here, dissipated slightly, and then we had a contiguous engagement right in around here. And it also came with stage 2 signals, which is wealth signal, stage 3 signals, which are breakout forecasters, and we just burst up and then we spent some time going sideways, cooling off, but we maintained the champion trend buy zone, the champion cross green opaque zone did present and maintained. However, the actual buy signal wasn't there. Why? Well, we didn't see the bottom of main chart part of the champion cross fire off. It reignited as of right there. And what you can see is the green block, champion cross, champion trend were engaged, and we got a slew of marketplace signals as well. Things like Rob's ITP, his TRP, my triple S. And as we move forward in time, that expansion burst up, then we consolidated. We got a range breaker to resume the sequence and breakout. We consolidated, bull flaggish, another range breaker, some breakout forecasters, and then the negative divergence. And at that stage, now this, of course, happened, as you can see, coming down and into the open of trade this morning. We locked in a negative bar right there. That was the 4 a.m. 4-hour bar with a TRP sell, a championship setup sell, followed by a pro RT sell. And we've got targets to the downside that are still open. Now, the question is the market still uptrending? Well, I could just pinch the chart and the answer would be yes. Is the market more vulnerable at these highs? The answer to that is also a yes. The key decision line that I can see over here that becomes really important is right in and around the 5,510 marker for the S&P E-minis using the U contract. Now, this territory becomes quite pernicious if broken, as there is a bit of white space underneath for selling to beget selling. Now, we ended and are still ticking away, as you can see right now, into the very last bits of futures trade. And we're still in a spot where sell signals on an hourly chart, as you can see to the right of the chart I'm manipulating, still are abound. We have not completed the down. However, we're in a counter trend bounce setup. Tomorrow, and well, overnight and into tomorrow, price action getting up and above that 55.65 area to 55.75 area opens the door for a repair. Remaining below 55.65-ish keeps the door open for yet another down. And as you can see, in between the SPY and, of course, the S&P E-minis, together we can take a look at this and go, okay, where is that dangerous line? Well, it just so happens to be right near those lows from today, and that would be around that $545 marker and change. Below there, there is trouble, likely down to the center of the weekly pivot range or lower. We've got to stay safe out there, folks. This is a market that indeed is stretched and showing some vulnerability. That vulnerability can catch up real quick. I hope that you've enjoyed today's video and the tactics that I utilized to take on live day trades in front of folks, and of course, using all of the technical tools and bringing them to fruition to pinpoint those moments of entry and exit. Now, I can't guarantee results like this every day. Past performance is not indicative of future results or track record. What this is a confluence of signals in a clear trending direction where I was able to take trades in front of members in the active trader room. And at one point, I was actually in the red in front of everyone. I was able to pull that right back out and, of course, go green and then a little greener into the end of the day. I look forward to sharing these strategies. And a lot of these strategies, a lot of the ideas behind them, a lot of the technicals are actually something that are going to be rolled into an incredible class that Dr. Keith did yesterday, and folks raved about it. We're doing it again on Saturday. Taking these types of strategies, putting together in a clear, concise, straightforward manner. Well, Dr. Keith is going to be coming to the table tomorrow, on Saturday, and giving you another view of how he puts these strategies together in his real live futures trading, options trading. And there's no better place to learn than from real, live, real money traders, folks that come to the table and put their money at risk and share with you, win, lose, or draw, how things work out and why they're approaching the market in a particular way. Well, Dr. Keith's methodology on how to use Heikin-Ashi to trade actively is a skill set that I think is going to be very valuable in a market like the one we're in, a market in transition. We'll see you Saturday, June the 22nd. Simply go to becomebettertrader.com/yes and get your seat now and get situated. You're going to have a great time at the class and build incredible skills that are essential in markets like these. Have a wonderful rest of your day, and thanks for watching.